Michelle,
All right.
you are free.
Am I on? Okay. So I just want to say thank you, Denisha. I appreciate the invitation to present today. And yeah, I not only have 20-year history of doing homebuyer education to real estate sales to now loan origination. I also purchased my first home in Boston with what was the soft second. So that was the predecessor loan to one mortgage offered by MHP. And that was a huge catalyst. So it's a great program. And I'm really going to go through the whole process of what a lender is looking for. So we're going to start with the pre-approval versus pre-qualification. We're going to look at the 4 C's of lending. This is the core of what's being looked at in terms of making determinations as to how much a person can qualify for and how it will be approved. We're going to talk about a couple of different mortgage programs, ratios. That would be your debt to income ratio, having an idea about lender, why do you choose who you're going to work with, who you're going to go with for your loan, the lending team, a little bit on the closing process and Q&A. And please do put your questions in the chat. I do stop throughout to sort of see if there's questions about that specific part. And so, and I want to keep it going as we go and not wait till the end. And we will talk about the financial assistance pieces associated with MassDreams and City of Boston as we go through. So the key, let's see. So the key is pre-qualification versus pre-approval. So there are 2 different letter types. A pre-qualification is going to be more informal. So and one of the things you can think about is the shorter the letter with less information, that's going to be a pre-qualification. They're probably not going to put as much information into that letter. It's largely verbal. It's an estimate. It gives you an idea of how much you might need for down payment. Your credit can be pulled, and it says without permission, but keep in mind, anytime you give your social security number, you can assume that your credit is going to be pulled. Or if you're doing any sort of online checking to see what you might qualify for, if you put your social security in there, your credit will be pulled and it will be a hard hit. Information is not necessarily verified, so they may not request pay stubs and tax returns, bank statements, that type of thing. And ultimately, it is not a full commitment to lend. A pre-approval, as in a full legal pre-approval, is in fact a full mortgage application. It is going to be reviewed by an underwriter. And the underwriter is the individual that makes the ultimate decision as to whether you will receive the loan or not. For a full pre-approval, you're going to provide verifying documentation. So it's going to be tax returns, W-2s, maybe 1099s if you have any consulting work that you do, pay stubs. You're going to provide bank statements, retirement statements, and so forth. And so if it is signed by an underwriter, it is a full legal pre-approval. Oftentimes, lenders will do what's a little bit of a hybrid. This is what Cambridge Trust does. And part of the reason we do it is so that we can get a pre-approval into your hands faster. When it's only underwritten, it can take much more time because if there are loans in process, those are always going to take priority. And then also if the underwriter has any questions, they're going to keep coming back to you for backup documentation. So it can take longer. So if you have a pre-approval that is signed by a MLO, so 2 terms that people will say often, mortgage loan originator or loan officer. So Cambridge Trust often just says loan originator. And then in that case, you want to say, okay, if it's signed by a loan originator or a loan officer, have they requested your documents? Have they looked at your tax returns? Have you provided pay stubs? Have you provided bank statements? And that they are providing you a pre-approval letter based on the documentation provided. So you want to make sure that it says in that letter that they have done a full financial review. Any questions so far?
So one question in the chat says, does Cambridge Trust have a mortgage calculator spreadsheet to guide buyers to see if they qualify?
We do not. We do not. I would recommend that you might want to choose to use the calculator on the MHP website, and it's specific to one mortgage. So you may try that. And that's mhp.net. So next, the 4 C's of lending. So these are the 4 core areas that we look at and in terms of determining the loan. So first we look at income. Do you have enough income to support the loan amount desired? Capital, this would be savings. Do you have enough money to cover the full down payment and all of the closing costs? And we do sort of factor in this bucket financial assistance. Credit, so it's not just about the score. You do have to have a score that qualifies, that will be approved, and that varies. That can vary based on loan program as well as lender. But also keep in mind that the lender is looking at your full credit report. So we use that to determine your minimum monthly debt obligation. So for each credit card, what is that a minimum amount owed? For student loans, what is that minimum monthly amount owed? And do keep in mind, with loans still in deferment and being reported at 0 payment, we take 1% of the full balance unless you can provide documentation that indicates what your monthly payment will be once they come out of deferment. And do keep in mind, there are many people who are going to receive the student loan forgiveness. We cannot apply that forgiveness until it is actually formally applied to your student loans and being reported to the bureaus. So just kind of keep that in mind. And then collateral.
So can I interrupt
Yeah.
for a second for clarity there?
Sure.
So you're saying if I've submitted all of my paperwork to have my student loans forgiven, it does not count. You're going to still calculate it based off of my monthly payments. It only counts as a 0 balance once I see a 0 balance on my credit report.
As in you have no more student loan debt.
Okay. Thank you.
Yep. You're welcome. And then collateral, the property is always going to be appraised, and we need to make sure that there's enough value there, that what you're paying for, there's enough value. So the first key thing is income. So you have to have acceptable income. Full-time and or part-time employment, self-employment, seasonal employment, Social Security and retirement, alimony, child support, rental income, and trust or dividend income. And I see a combination of all of these often on many loans. I very rarely have a borrower where they only have one job, one full-time employment. I see a mixture of it all. So for example, if you do have a full-time job and another part-time job, do keep in mind that you will need to have a 2-year work history for any of this. You always have to have a 2-year history for income. I will talk about alimony and child support as a caveat to that in a moment. So for example, you've been working your full-time job for 5 years, and a year and a half ago, you started a part-time job. We would utilize that income to qualify you for the loan, but we would not use that part-time income towards the loan amount until you had worked that part-time job for at least 2 years. Same goes with, and many people have self-employment. So sometimes it's they're earning income from rideshare or delivery, rideshare delivery, or they're doing whatever their expertise is, they are earning additional income as self-employment. So oftentimes it is you're receiving 1099s, you're paying those taxes on that income earned at the end of the year when you file your taxes. Seasonal employment, if you've been doing that seasonal work every year at whatever point you do that work, then, and we can see the documentation, then we can utilize that. Same with Social Security, retirement, we utilize that. Alimony and child support, the key to this is that you must have court documentation. So you must have a divorce decree or a judgment where it is indicating the amount of funds that you should be receiving. So typically, I don't see a lot of alimony, but I do see child support. You would have either that divorce decree or that judgment, and we can see exactly how much you should be receiving. You need to be receiving it for at least 6 months. And then if you've been receiving it anywhere from 6 months to at least a year, we need to see a year's worth of bank statements showing that you have received that child support and or alimony every month as agreed, that it's going into your account as agreed. So if there's any irregularity, we cannot use that income towards the loan qualification, towards the loan amount that you'll receive. Yes, Denisha.
So if they are inconsistent with paying child support, so let's say it's been, let's say $500 every month, and then there was like 2 months where they missed it or it was not, does that count against you so that now you cannot use that?
That is correct. If there's any inconsistency, then we cannot use it, unfortunately.
Continue. I'll read all the questions when you take your next break.
All right. So then we continue. So the key thing is that income must be stable and likely to continue. So if you are a W-2 employee and you receive a salary, you might get overtime, you might work hourly, but as long as you have a W-2, you receive that W-2 at the end of the year, we are looking at your gross monthly income. We are not looking at the net because the net is different for everybody. So we always look at gross. We need to see at least a minimum of 2 years employment history. It needs to be within the same type of work. So sometimes I've had folks that have switched jobs, and that's okay if you switch a job and they felt like it's not exactly the same job as the one they had before. But if you can show that it takes the same skill set and the skills you had with the job before, we can lead that into the next job to have the 2-year work history. Also, if you've been in school and you can show that your education directly led to being able to do the work that you now do, we can use the education as part of your work history as well. If there's a completely different shift, for example, somebody they were a teacher and they said, no, I'm not doing this anymore for whatever reasons. And then they started working, say, for NSTAR. It's a totally different type of job. There's different training. You go start working at NSTAR, National Grid. It's a different type of training for that job that you'll have with them. We would not be able to use the time employed as a teacher. So it's that type of thing. If there's gaps, it may be fine. We just need explanation. If it's been a really long gap, if it's been a year, then you would not have the 2-year work history, most likely. But do keep in mind, I always recommend talking with a loan originator to find out if your specific situation, if that explanation would be okay. Sometimes you never know, it might work. You also might find that it might work for one lender, another lender might allow for different things. So they might allow you a little more time. So if you're not getting somewhere with one lender, it can be worth talking to another. Self-employment. So for self-employment, so that would be if you have you're only earning income. So I actually have somebody who is getting her loan. She's getting a new place and she is a singer. She's a soprano singer and she teaches and she performs. And so she is totally and completely self-employed. And so we use her net income and it's an average of 2 years. So there is a year-to-date profit and loss where she tells us the income she's earned. She tells us what her expenses have been thus far and how much her net income is this year. We then go look at her Schedule C on her tax returns to see what her net income is that she declared for the past 2 years. And we'll do the math calculations to get a 24-month average. So do keep in mind that if you are if you have written off a lot of your expenses, and some folks have, I actually had one person, she was writing off so much for her part-time self-employment that she was at a loss. And she couldn't qualify because it was just enough of a loss that she couldn't qualify for enough loan amount because we actually had to subtract that loss, that average loss from her other full-time employment. So do keep in mind that those deductions that you take can have an impact. Any questions about income so far, Tanisha?
Yes, let me scroll back to the top. So one question was, if after the student loan debt has been cleared, so they have the zero balance, do they have to resubmit all documents again or just documentation for the zero balance?
I would submit documentation that it's zero balance, because we get the information via credit report, and you don't want to have your credit report pulled again if you don't have to. So just
They care about
documentation
your
that's
credit.
been paid from your servicer.
There you go, perfect. And what if you work full-time, but you're per diem currently? Is there a difference in the calculation?
Per diem can be challenging. We often don't even look. I would have to see it. Per diem can be challenging. If you have a long history of working per diem and we can see that you continually have consistent income, then you should be okay. If there's any inconsistencies, then you might see that it's challenging. If it's up and down and kind of all over the place, then you may find challenges.
Okay.
The key is that it's must be stable and likely to continue. So the inconsistencies is where you have the challenge with the stability.
Does the 2-year employment history only apply for one job or for all forms of employment? If you have a full-time and a part-time? I believe you
So
answered
all
that already, so I'm
jobs,
just
even if
making
it's
very
similar type work, like you could have someone who's been working. I have a borrower and he has a history of working for 3 different companies doing as a CNA. 2 of them, he has been there and doing the work for 6 years or more. 1, he has less than 2 years of history with that company. We can only use the ones where it was 5-6 years, because he needs to document the history of working that many jobs. Is he going to drop that job as soon as he buys the home? We need to see that.
Got it. That makes sense. Thank you for asking this, because I feel like most people do not. So what if you are the parent who is paying child support? Is that now deducted from your income for you qualifying for a home?
So that will be considered a liability, much like a credit card or the student loan or car loan would be a liability. And that monthly amount, we would put that into your liabilities, and it would impact your debt to income ratio, which we will talk about as we get through the presentation.
Yep. So it's going to show that you owe money, more money than you're bringing in, essentially, if you put it that way.
It will be put in with your other debt.
That I'm reading through because there's comments I was answering in between as well. Did that. We're going to go over debt to income, so I'll wait for that. If child support is ending soon, since the child will be graduating college, when does the income for that cut off? So what is the cutoff period for that income? So they will, let's assume they have it, they purchase a house by December. Would you count it because they would purchase a house by December, even though the child would graduate by May of next year?
As long as you have, we would need the documentation of the date that it would end, and then it's roughly what's utilized is if you have 9 payments or less.
Okay, perfect. And then I think this is a lot of people due to COVID. How has that impacted borrowers in terms of getting a pre-approval? Because now some people have longer gaps in work history through no fault of their own.
If you have had a significant gap, many people had gaps in 2020. Sometimes it went into 2021. If it's still continuing, then most likely it would not work. I would say if you're more than 6 to 9 months with a gap, you're going to want to check in with the lender to confirm. It really does depend on that scenario, but I think you're going to find it that you're not going to be able, you're going to need to wait until you have that full year, 2-year history built back up.
Perfect. Thank you. And then overtime, how does that factor into all of this?
That is great. Overtime and commission are really shift differentials, all of that additional shift work income becomes an average. We have to see the income. So we take the regular base pay and we calculate that out. And we have to have seen that you have been earning overtime for at least 2 years. And then we do the average of that overtime or the commission or whatnot. That's how we sort of figure out. And also keep in mind, I did have somebody, where they changed jobs. So the type of job that they have is a commission-based job. So they have an income, but they really are earning a significant amount of commission. And that's kind of how they have their salary, their income coming in. And because they switched jobs, we could not proceed because we didn't have that 2-year history with the same employer.
Got it. Okay. Can you use a co-applicant to help with the qualification? And do the income guidelines change with that? I believe you discussed that later on.
You can have a co-borrower. I've actually had 3 co-borrowers before. But they must, for first-time homebuyer loan programs, they must also be living in the household. And so when you do have a co-borrower, and in fact, typically what we do is you utilize for qualification purposes for a first-time homebuyer loan program, we're looking at the incomes of everybody age 18 or older, and we're looking at the assets.
Perfect. And I think that is specific to the loan product, correct?
Correct.
So you qualify for all of the benefits of the one mortgage. And then last question that's not similar to everything else is for student loan, if their student loan is in default and it's over 10 years, is it worth rehabilitating the loan to have monthly payments? Because I assume it would still be.
I would recommend checking your credit report, getting a free credit report at annualcreditreport.com and seeing if it's still on there. If a student loan is in default, if anything is in default or in collections, then it is going to have to be paid. There is no way to move forward if it shows up on your credit report.
Okay. Perfect. And I think we're going to talk about assets later on, correct?
Correct.
So I'll save that question. Okay. Continue, ma'am. Thank you. Uh-oh, I think you're frozen, Michelle. Did we lose you? One second, guys. I'm texting her now. I think she's frozen. So in the meantime, while Michelle logs back on, sorry for the technical difficulties at the moment. Someone asked, is the MassDreams a grant or a loan? It is a grant. So this is money that you do not have to pay back. This is money that it is yours. You close on the house today. They provide the grant money to you today. If you just, I don't see why you would, but if you decided to sell tomorrow, okay, you have potentially $50,000 in equity in the house. It is a grant. There's no kind of like forgiveness period for it. It's from day one, it's yours. And Michelle will talk about it later on, that you can combine it with some other down payment assistance programs that we have in Boston specifically, and even outside of Boston. So you can try to stack as many opportunities and options there are to work to your benefit. I got off the phone with a lender today, and they said they actually were able to help someone get over $77,000 by stacking all of these programs. So you do have the opportunity to really maximize on this. But again, it is always based on the purchase price of the home. So it's a percentage of the purchase price, and Michelle will go over that with you guys. Let me see, I'll try to answer some questions here in the meantime. if you open credit cards without being in collection, but you have to pay them first to apply. So Michelle's going to talk about debt to income ratio. And I think a lot of buyers, when we think of we want to buy a home, it's like, I have a job, I can go apply and get a mortgage because I pay rent on time every month. Lenders look at more than that because they don't want you to be what we call house poor, where you're literally living paycheck to paycheck, or you're not even living paycheck to paycheck. You're in the red every month to afford a house. So they always calculate a percentage of your income going toward your mortgage and all of your debt. And she's going to go over those numbers with you guys later. If you have a lot of credit card debt, that can affect your ability to qualify for a mortgage or how much you qualify for. So that's why we try to get you to pay down as much as possible before. And we'll give you the calculation so you know where you need to fall so you're not, in trouble later on. Am I able to help with the additional funds? Yes. So part of what I do is I go out and I research. This is the stuff that I love. It's not home buyer counseling, but it's like strategic planning with home buyers. So we can go out and find money, find opportunities, put together the strategy for you to accomplish your goal. That's kind of what we do to help people. So the person who I have a client who just closed and they got the $39,000. That's literally from doing research to see what can they put together to make it work. They were able to get the 39 from the MassDreams program, plus get $10,000 from the seller. But since they didn't need the money from the seller, they got a check at closing. So they left, like they got paid to buy a house last week, as opposed to them having to put money out in the end. So those are all things that we work with you guys to kind of figure out and navigate. Let me see if Michelle is back in 1 second. Michelle, I see her. 1 second. Michelle, you should be able to control it again. Let's see.
I think, all right, can you hear me now? I think I was unmuted.
Yes.
Okay, yep. So,
hold on, let me pull up the presentation on my end. Do you need me to pull it up on my side?
Yes, okay. I will need you to be in control. Sorry about that.
Yes, ma'am. Thank you guys for your patience while we figure this out. Okay, so screen share. And how do I do the presentation?
So if you go down to the bottom towards the left, you'll see a little icon. I mean, towards the right, you'll see a little icon. Yes.
There you go.
All right. Okay. Thank you. I appreciate it. And my apologies. So go back, 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 forward. 1. Perfect. Nope. Forward, forward.
Beyond this one?
Next one. Yes, this one. Okay. So my apologies, everybody. So I'm back. So savings, checking, CDs, gifts, stocks and bonds. So many people are doing investments, 401k and or 403b. So I have here, you must provide the terms. I do recommend, if you think you're going to utilize funds from your 401k or 403b, that you reach out to your whoever holds that plan, Fidelity or Sentinel or Vanguard or whoever it might be, to find out how much you can borrow against, how much can you utilize, because it is different for everybody and it's very often not the full amount. So do check in that. And then financial assistance. A lot of people are utilizing financial assistance. So next slide. So here, and the key to big key thing is the new financial assistance is MassDreams. So this is the money Denisha was talking about, the 65 million that is available. And it is available with one mortgage, One Plus Boston, and Mass Housing loans only. And it is available only to residents who live in one of 29 communities deemed hardest hit by COVID. So that would be the gateway cities, Boston, Framingham, and Randolph. I have up here at the top of this slide, mymasshome.org. I recommend that you go to that site. That's where you can complete the eligibility, the pre-eligibility form. That's the place to start. Once you get a letter that said, yes, you do qualify, you live in one of these gateway cities, Boston, Framingham, or Randolph, you will receive a letter, and that's the letter you can then go to a lender and say, I qualify for MassDreams. I would like to get pre-approved. Just note that there is also, sorry, there's so many questions that keep popping up in front of the screen on the little phone. So very often, additional financial assistance is available through the municipality. So for example, with the city of Boston, that's where the additional financial assistance is provided through the city. And you can actually layer various sources of financial assistance. You can receive MassDreams, and then you can receive assistance from the municipality where you're buying. Do keep in mind that you can use MassDreams to buy anywhere in the state. But you have to currently reside in one of the 29 communities, and then you can buy where you want. You can utilize that financial assistance. So some communities that have assistance, City of Cambridge, City of Boston, Somerville, Lowell. There's the North Suburban Consortium that covers 8 communities. There's a variety of different municipal support available. And I would recommend that you go to My Mass Home. There's a section where you can find where all the down payment assistance programs are and the guidelines for those programs. So I'd really use My Mass Home as that sort of central website to find all things first-time home buyer. And then additionally, one last thing is Federal Home Loan Bank has a financial assistance program available, and it's through participating banks only. So there's the Equity Builder program, and then there's Housing Our Workforce. And it sort of depends on your household income, which one you might qualify. Equity Builder is currently up to $22,000 towards your down payment and or closing costs. And then Housing Our Workforce is actually a match program. The challenge, however, is that you can, they release funds, Federal Home Loan Bank releases funds throughout the year. And if they run out of funds, you have to wait until the following year for more funds to be released. So you do have to check in with a bank to see, are there any funds still available? So do kind of keep that in mind. Oftentimes that's a program where if there's any gaps, that's when it gets utilized. All right, next slide. Oh, is this the same? Okay. So if you're, just to give you an example, I wanted to talk about financial assistance in Boston. And this is largely what we're doing. You have access to 10% of the purchase price available through grants. So My MassDreams, you can receive 5% of the purchase price plus the amount of closing costs covered in a grant. This amount gets capped at $50,000. Additionally, you can receive an additional 5% of the purchase price from the City of Boston. And if you're not getting MassDreams for some reason, they will cover the closing costs in a grant. If you are a 1 or a 1 Plus Boston loan program, if those are the loans you're utilizing, then you would, oh, sorry, I got to put my glasses on. My apologies. I got a little turned around. So if you are doing 1 Plus Boston, just sort of keep in mind that you're going to get an interest rate reduction of either 0.5 point or a full point, depending on your household income. And you will need to contribute at least 1.5% of the purchase price from your own funds. So that means you are going to be at a minimum going and purchasing that property with a down payment of 11.5%. And so I'll stop because I've sort of been bouncing around and I've been a little sort of out of sorts after having to get on and use my phone to continue with the presentation. Questions specific to this so far?
Let me scroll back and see. I will send you guys, or once we're at the end of the presentation, I'll stop sharing the screen and then I'll pull up the 29 cities and towns that do qualify so you guys can see. Brockton is on that list. When is the window to get the grant? Until funds run out. So the grant was just launched, was it September, Michelle? September
Yes,
12th?
mid-September.
September.
Yep.
Mid-September. So it's until funds run out. So this is why I say Christmas is optional this year, and we need to get our finances where they need to be, because we literally have no idea when it's going to run out. It's just a rolling basis of buyers, kind of once you have a house under agreement. And will you talk about that, Michelle? Kind of when does the process start? So people don't think it's, hey,
yeah,
I got this
have a
later.
slide talking about that. Yep.
Okay, perfect.
Later in the presentation.
Okay. Good evening. Did you find out? Okay, so the section, I'm not sure if you're aware, Michelle, for the Section 8 to Homeownership, does that work with this program as well? Can you combine that with this program?
Yes, if you're working with a lender that offers Section 8 to Homeownership, then yes. So I do believe Eastern Bank is offering Section 8 to Homeownership. They do one, and they do
Webster
One Plus
Bank does as
Boston.
well.
Yeah, and Webster Bank.
And
Okay,
Webster
that's
Bank
good to
as
know.
well. Nope. So the question was, can the entire amount of the MassDreams grant go toward the down payment? And I'll let you explain how they calculate how much goes towards it.
So it will always be 5% of the purchase price towards the down payment. And in addition to that, they will cover the closing costs. It's never going to be that you'd say, okay, my closing costs will also go. MassDreams will always be 5% of the purchase price towards down payment and a grant to cover your closing costs.
Perfect. And is the grant counted as income on your tax return?
My understanding is yes, and that they will send out the 1099. And it will be for federal, but not state. Yes.
Okay. Which banks offer these two programs? On the mymasshome.org website, they have pretty much all of the information you need in terms of participating lenders, home buyer classes, everything that you need to understand the program or find the answers to it. They have it there. After this session, if you guys give me, I'll send out the recording once it's uploaded from Zoom. But if you give me until the end of this week, I'll try to create like a side-by-side so you can see the mass housing compared to the one mortgage and what they offer. So you have that to kind of help guide you with your questioning. And then I'll also send you guys the links on the website for My Mass Home of where to find what you need to find. Does the federal home loan assistance fall under MassDream umbrella, or is that separate?
Good question. That is separate. It is a separate source of funds.
Okay. We're going to get into DTI in a little bit, so I'm not going to ask that question right now. Taxes are your past 2 years of tax returns. Does the city go back 3 years, Michelle?
Yeah, for one mortgage, it's City of Boston and one mortgage and One Plus Boston all require 3 years of tax returns because the qualifying factor for being a first-time home buyer is that you cannot have owned a property in the last 3 years. So that's why 3 years tax returns are required.
So for other loan products, if you're using FHA, Mass Housing, all of them, they usually require 2 years of tax returns. But for the one mortgage, and especially if you're using the One Plus Boston, they need your past 3 years. So that would be right now, you're looking at 2021, 2020, and 2019 is what you'd have to submit. Is it mandatory that you have to live in your first purchased home within the first few months to a year, or can you rent it out?
With one mortgage, you cannot rent out your home. One mortgage and One Plus Boston, you must be owner occupied. What I don't know is if MassDreams requires that as well.
Okay. I think that's all of the questions there. And to clarify, because I think someone's going to ask later on, for MassDreams, for those who attended last week with Mass Housing, you did not have a requirement to put down an additional 1.5%. And then they also return those funds to you when you close. If you did make an earnest money deposit for the One Plus Boston, if you put in the 1.5%, are you able to get that back at closing, or that goes into the transaction no matter what?
That goes into the transaction no matter what.
Okay. So for the One Plus Boston, you need to have your 1.5% of the purchase price, and then you will qualify for the additional funds, which would be the MassDreams 5%, and then the City of Boston 5%.
Correct.
So I just want to make sure everyone's clear on that. And now we're going into how much do you need?
All right. So as you can see, this presentation, this piece was put together prior to MassDreams. So down payment, at least 3% of the purchase price. So it's typical for a first-time home buyer, the down payment amount to be required 3%. As we know with One Plus Boston, you'll need to have 1.5% come from your own funds. Mass Housing doesn't require 1.5%. You'll get that money back, and that you'll get that you have the options to have an addition that 5% in grant, or up to 10% in grant money, and even potentially more if you're utilizing other financial assistance products like the Federal Home Loan Bank, Equity Builder, and HOW program. You have to have enough money to cover closing costs. Some of those things are origination fees, title insurance, attorney fees, recording fees. If you're buying a condo, there will be a condo questionnaire. Very often there is a requirement. The larger developments may require a fee for the management company to fill that out. Municipal lien fee, we need to make sure there are no liens on that property. We need to find out if you need flood insurance or not. And then there's a credit report fee. So those are some of the things that you'll find in closing costs. And do keep in mind that at the beginning, when you submit a loan application, you're going to get a loan estimate that will detail these costs. And at the end, right before you close, you'll get a closing disclosure, which will also detail all of the costs. You're going to have to cover prepaid expenses, prepaid interest. So if you close on any day other than the first of the month, you will need to prepay interest. Your mortgage is paid in arrears. That means if you were to close on November 1st, that money, there's no money needed for any interest for the month of October. So when I pay my mortgage on the 1st of November, it's actually covering October. So it's the opposite of rent. When you pay on the 1st for rent, it covers that month. When you pay your rent on November 1st, you're paying for November. So you have prepaid interest. You're going to have money that goes into your escrow. So when you pay your mortgage, there will be a portion of that mortgage payment every month for money that's going to go into an escrow account that's just attached to you. And the bank will pay your taxes, your property taxes on your behalf, and will renew your home insurance policy at the end of the year. So you're going to be required to put a few months reserves into that escrow. If you are buying a multifamily, you will be required to have reserves. So for one mortgage and One Plus Boston, that would be anywhere from 1 month reserves to 2 months reserves. If you're using a different loan program, that could be much higher, upwards of even 6 months worth of reserves. Additionally, do keep in mind, sometimes if we can see that somebody has compensating factors, having money remaining in your bank account when you close can also help. So if you have 2 months reserves in your bank account, that could be a compensating factor. And that's one of the things that can allow us to increase the amount of loan that you qualify for. We can use higher debt to income ratios. All right, next slide.
For those who do not know, what is a compensating factor? What does that mean?
So a compensating factor, we might see that we can have higher debt to income ratios when we see certain things. It could be that you have been working for the same employer for 2 years. It could be that you have low revolving debt as compared to your installment debt. The percentage of that revolving debt is low. It could be that you have you have very little payment shock. Your mortgage is less or only a little bit more, no more than 20% more than what the rent is that you've been paying. So those would be some of the compensating factors that we could use. Also credit score. So if you qualify with your credit score, then that's also considered a compensating factor.
Perfect. And then you talked about reserves. Does it have to be cash in your bank account, or can that be funds in your retirement, or if you have stocks or anything else that you could liquidate?
So it needs to be liquid. So if it's in retirement, because it's not liquid, that would not count as long as it's liquid.
Okay.
Just an example, just so you can kind of start to wrap your head around it. So for a condo that costs $300,000, we're sort of assuming that the real estate taxes are $4,000 annually. We always divide those taxes by 12, that annual taxes, and we utilize that when we're figuring out how much you can qualify for. So if you are looking in a couple different communities, make sure to tell your loan originator or your loan officer, because they want to make sure that they can calculate those taxes correctly, because they can vary widely. For example, Boston is $10.88 per $1,000 of valuation of that property. If you go to Revere, it's over $21. So that's a huge, huge difference. And you would not qualify for as much loan if you were looking in a community in Revere. So if you had Boston or Revere as your two communities, that's just sort of a comparison. We typically will assume a condo fee of $250, but just know sometimes it's less, sometimes it's more. So if you find you're looking at properties and those condo fees are looking $350, $400, just I recommend checking back in with your loan originator to make sure you still qualify at those higher amount additional funds there. And you're going to need at least 3% down, so $9,000. Now, we know that at this point, you don't need to come up with the full $9,000 out of your down payment, out of your own funds. You need to come up with 1.5%. And so I would say for a $300,000 property, I can actually do, you need to come up with $4,500. That's 1.5%. And closing costs, an estimate about $4,500, prepaids $2,500. So you'd need at least $16,000 to close on a $300,000
$300,000.
Yeah,
perfect. But now that we have the MassDreams, how much would you actually need to purchase the same on a $300,000 purchase? Looking at these numbers for funds needed, how much of it would be covered by the grant versus how much would be coming out of your pocket?
You would need $4,500. That's it. Versus
So
the
hopefully you guys get to
16,000 that.
Mhm.
Yep, go ahead.
No, go ahead.
Just versus the 16,000, it would be 4,500.
Yep. So I just want you guys to see the savings that you have by utilizing this program. And you can combine, you know, various programs even if you're buying outside of Boston. So
So then we are looking at credit, so your credit score. Cambridge Trust requires a 660 for a condo or a single and a 680 for a multifamily, but do keep in mind that the threshold some other lenders may have is 640 and 660. So just sort of keep that in mind. You want to make sure that your scores are within the required limits. So check with the lender to see. The lender is going to use your middle score. So we are going to pull from TransUnion, from Equifax and Experian, and we're going to use that middle score. If there are two borrowers, we're going to pull from all three bureaus for both borrowers, or all three borrowers if there's more, and we're going to take the lower of the middle scores. So do keep in mind, if you have two borrowers and somebody has a middle score that's below, so let's just use 660, then they would not qualify for a loan with Cambridge Trust with those two borrowers, even if the other borrower even had, like, say they had a 790. That middle score for the lower middle score would be the one used. You must have 3 trade lines. A trade line is essentially every line of credit that you have would be a trade line. So if you have a credit card and that creditor reports to the bureaus, we will see for that credit card that that's one trade line, giving us all of the information on how much you owe, your minimum monthly debt obligation, when you opened up that line of that credit card. It's going to give us all of that information. You don't have to be using them all, but you do have to have them and have used them within reason, could be a couple years. If it's longer than that and it's still on there, it might not be usable if you haven't used it in a significant amount of time. So we're looking at credit cards, store cards, school loans, auto loans, personal loans. And we do recommend that you keep your revolving debt below 30% usage. That has a positive impact on your credit score and also helps to keep your debt to income ratio low. If you do not have 3 trade lines, we're going to talk in a moment about non-traditional credit. Also, if you have had, and most people have had this, a fraud alert, if you have had somebody try to steal your credit and utilize your credit, many people put fraud alerts on. We would need that to be lifted so that we could get your score, and we do just need an explanation. And then just know, when you do review your credit reports, we're going to need to know, like, if there are addresses that may not have been yours, we may ask questions about that. Oftentimes it's common for there to be addresses that are not there. We're going to ask about inquiries. So for example, if you are shopping around and you have your credit pulled by multiple lenders, all you have to do is explain that you were shopping for credit, but you will be asked why you had so many inquiries and what they were for. Also, if you've had late payments, you will need to just provide explanation. All right, next slide. And non-traditional credit, you do have the option if you have fewer than 3 trade lines or if you have no credit at all. But you do need to check in with the lender to see if they will allow for non-traditional credit, and if they do, what they'll utilize it for. Is it just to sort of be an additional padding if you don't have 3 trade lines, or will they allow it if you have no credit at all? And if you want to use non-traditional credit, you must be able to document 12 months of rent paid on time. And it has to come in the form of canceled rent checks or 12 months of bank statements where we can see the exact amount of your rent coming out on time as agreed. So for example, I've had folks where they go and they take it out of the ATM, or they go to a local branch and get cash because that's how the landlord would like it paid. We just need to see that withdrawal at the same time every month. Doesn't have to be the exact day, but around the same time every month in the same exact amount. And if you take out cash because you were going to do something else as well, do multiple withdrawals. Make sure, because if those change at any time, then the documentation won't be accepted. Then we need a utility bill in your name at the address where you live. Examples: NSTAR, Eversource, National Grid, Comcast, RCN. And then a third obligation, you could use another utility bill or a phone bill, or you could use something like car insurance, gym membership, or childcare. So I will stop here to answer questions about credit.
Perfect. Let me scroll back up. If you have strong income, does that help cancel out the fact that you may not have stellar credit, or is that you need strong income and strong credit?
You need strong income and strong credit.
How can you have reserves if you can only have $75,000 in assets for the one Boston? It's a good question, given the
so if you have 75,000 in, typically most folks don't utilize that full $75,000 towards the purchase. You just need to make sure that some of that remains in your account. And I would say 2 months worth of reserves, 2 months worth of mortgage payments, plus condo fee, if you're buying a condo.
Okay. And for right now, given, I think it's because of the MassDreams, is it true that they're not doing the asset test right now? So it doesn't matter if you have 75,000 or not, or more?
So one mortgage always has the liquid asset requirement of no more than 75,000, but they're not doing an asset test to determine how much. You will just get 5% of the purchase price. If you receive MassDreams, it will always be 5%. If you get One Plus Boston or financial assistance through the city of Boston, it will always be 5%. So you will always get a full 10% if you're using both of those. And then you can opt to put in however much additional money if you want to have an increased purchase price.
Okay. So before MassDreams, if you had, let's say, $74,000 in assets, they would determine how much assistance they would provide. So you wouldn't get 5%, you might get 1%. Is that what you're saying? Before.
The city would always say based on need. So I have to say the city of Boston, I cannot tell you exactly how they determined what you would get. They would say it was based on need. Typically, if you had close to $75,000 in assets, you might not receive any financial assistance.
That makes sense. But what we're saying today is no matter what, you get 5% from the city of Boston and 5% from MassDreams if you're combining both programs until those funds run out. So this is why, again, we're focused. For the rest of 2022 into 2023, we are all focused, okay? Because there are a lot of things that they're waiving right now. And the city had loans. These are now grants. Make sure you're maximizing, okay? Do you call the bureaus to update the revolving debt if it's not updated?
So if you pull your credit report and you do not, and it's not correct, you would need to do a dispute directly with the bureaus. So I would say go to TransUnion, go to the website for TransUnion, Equifax, and Experian, and do a dispute directly to the bureau if it is not correct.
Anything that is inaccurate on your credit report, you should be disputing right now before you start your process. So hopefully by the time you speak with the lender, it's not there anymore because it's been disputed and removed. Because if they can't prove or verify it, they have to remove it. So dispute. Summary of that. If you do not have 3 trade lines, I love that they're finally accepting rent payments because there's so many people who they're like, I pay my rent on time every month, but I can't get a mortgage because I don't have credit cards. So now you're not being penalized for that. It works in your favor as long as you can document it. If that is your situation, listen to Michelle. So if you're taking out $2,000 a month for rent, but you also needed $400 to pay for your heating bill, do not take out $2,400 because it voids the whole thing. You need to take out $2,000 for rent and then take out a separate withdrawal of $400 for your bills. Do not put them together because if they see the 24, and they know you're only supposed to pay 2,000, it cancels out all of what you're trying to do. Your goal was just defeated. Okay, so make sure you're consistent and you remember. And if that's going to be difficult for you, maybe buy a checkbook and write the rent as a check every month to your landlord so you don't mess it up. Simple things. You have here other obligations, so car insurance, gym membership, the cell phone count is in that as well, Michelle?
Yep.
I
As
feel like if
long
a
as
gym
you,
membership counts, cell phone
yeah,
should.
as long as you can document that you paid on time as agreed for 12 months, it will count. So I would say a utility bill, you would need to be able to go online, or you might get paper bills and keep them, but you would need to show statements, full statements, and that's how we can see that it was paid on time as agreed.
Perfect. And then do credit repair specialists really help? I think it depends on who, not all are created equal. A lot of it you can do yourself. Credit repair companies, to me, you pay for the convenience of you not having to do it yourself. They do it. But a lot of things, it's just disputing. So you can do a lot of that yourself. But if you need, I guess, valid or quality people, we can provide that for you as well. I don't do that, but I know people who do. If you don't qualify for MassDreams, can you still apply for the City of Boston financial assistance to get 5% of the purchase price?
Yes.
Perfect.
And then in that instance, the City of Boston will cover your closing costs.
Perfect. Okay. And then what happens if you send the check on time, but your landlord cashes the check like a month later, or they don't deposit it on time for it to show in your bank account as an on-time payment?
Mm-hmm. So in
That's a
that
good question.
instance, that is a good question. And that does happen. Sometimes you just need to explain. It might be that, you write to your loan originator and in the email you explain that. Typically, we can see the canceled rent check in your statement and we can see when you dated it. So I would say no matter when you provide that check, you always put the first of the month on that check. You might send it
There you
in
go.
5 days late. But as far as the lender can tell, it was dated the exact same every month.
Dated the exact same every month. Yep. If you're paying it via Zelle, there needs to be a paper trail. So essentially, whatever you're doing in terms of alternative or non-traditional credit, it needs to be documented. So something that they can see where you didn't write it out, but it's in a statement, a bank statement, or a statement for the bill that you've paid that on time every month. So all of those things do count.
And we see a lot of people paying rent via Zelle, via Venmo, via various rent apps. So that's never a problem as long as we can see it in the 12 months of statements.
Okay, so now we're discussing collateral.
All right, and that's the appraisal. We need to make sure that the property has the value, that you're not paying over for what the value of that property is. So as soon as you submit your loan application, we're going to make sure to get that appraisal ordered right away. That is a cost that you do have to pay for. Very often, though, we can wait until that can get covered in closing costs, which can be a benefit when you're getting the financial assistance. Title. So the attorney that represents the bank will run title to make sure you have a clear legal right to purchase the property. We want to make sure nobody else can come in and say, hey, wait, that's my property. And take it away from you. There's municipal lien certificate. So we're going to certify that all the taxes, assessments, water and sewer charges, everything that has been paid by the seller. So it can be free and clear for you to purchase the property. There's also what's called the 6D certificate that the seller signs to certify that there are no unpaid condo fees. If there are unpaid condo fees by that seller, you cannot close on that property. Any questions? And I will say properties tend to appraise unless there's been a bidding war. That seems to be the only time that I have seen there be any issues. So with most of my first-time home buyers, we rarely see an appraisal issue. It typically appraises at or slightly above what the person is buying it for.
Now that we are slowly, like a tortoise, returning to normal real estate functioning, I guess, the bidding wars are kind of subsiding a little bit, and you're not seeing these where people are putting in the appraisal gap. So let's say the appraiser comes in and he says, okay, the house is worth $300,000, and there's a buyer who said, well, I will pay $20,000 above that, so I'm going to pay $320,000 for this house because I want it. We're seeing that that's not happening as much anymore. Whereas last year and earlier this year, absolutely, people were going 100,000 appraisal gaps. It was absolutely crazy. So you guys, yes, interest rates are higher, but this program is helping to kind of combat that and negate that for you in a good way. And you don't have those bidding wars that just made the market absolutely crazy for buyers. So getting closer to normal for you. So now I believe we had someone, they asked it because they wanted this question answered from the beginning. So we are here, debt to income ratio, probably one of the most important things after credit, in terms of if you're trying to purchase a home, very, very important.
Right. So typically referred to as DTI. So there is a front and a back ratio. Your front ratio is your housing debt. So that will be your principal, your interest, taxes, and insurance. If you're buying a condo, there will be a condo fee. And if your loan has private mortgage insurance, then that will be part of that housing debt as well, often referred to as PMI or just MI, mortgage insurance. So the front ratio is anywhere from 33 to 36%. This is on a single or a condo. And the reason it's 33 to 36%, specifically with one mortgage and One Plus Boston, is that you must have compensating factors, at least 3 compensating factors, in order to go as high as the 36% gross monthly income. So that would be, you have a qualifying credit score, you've been employed with your employer for at least 2 years, you have low revolving debt as compared to your installment debt, or you have no payment shock. So those are some of the compensating factors. Back ratio is the total debt. And so here we have 38 to 50%. And really this is so broad because of it depends on the loan program and the property type. So I would say with a condo or a single family with One or One Plus Boston, it's going to go up to 38% if you do not have compensating factors. If you do have compensating factors, we can go up to 43%. And then if you were buying a 2-family, or you can go up to 45% with the back ratio, a 3-family up to 50%. But also lenders may have their own what they call overlays, so they might not be quite as high. So it is always important to ask, what are the ratios that I can use with you? And then the total back ratio is going to be your total debt. So we're looking at, you'll have your housing debt and then all of the additional debt that you have here. So that would be car payments, student loans, installment loans, credit cards. Also do keep in mind, if you're leasing a car, that will be included, that payment will be included there. Next slide.
I've definitely had people think because they're leasing the car, it doesn't count. So thank you for stating that out loud.
Yeah.
And then for the front end versus back end ratio, let's assume you have no debt, right? So the only debt you would have is your mortgage. Is the front end ratio allowed to be higher? Because if the back end ratio is your total debt and that goes up to 50, could your, if you have no other debt, could your front end ratio go up to that number as well? Or there's a cap on that no matter what?
It is never going to go higher than 36%. And if you do not have the compensating factors, it will not go higher than 33%. Because remember, you always have, you have the ability to apply for more credit. So.
Okay. So I asked that question for you guys because I want you, when you start thinking of what you can afford, and I'll send out an exercise for you to do. And this is what I have buyers do. it's literally calculate a third of your income just about, right? So calculate what a third of your income is. And when you're looking online, you're perusing Zillow and all of these other sites, now you're looking at how much that monthly cost is. You're going to be, that number needs to match what a third of your income is, everything included. So now you can start to guesstimate what you think you'd get pre-approved for, because you're going to see it. It's always a third of your income. They're not going to let you go above that. Even though you might be paying 50% of your income to rent, they will not allow you to pay 50% of your income towards a mortgage. And that's very important, because a lot of people don't understand that and they get upset when they pay so much in rent and they can't pay the equivalent in mortgage. Let me see what questions. So someone asked, what is a third? So it would be around that 33%. And here, Michelle has some ratios or some numbers for you guys to see what they look like.
All right. So, for example, if we were to take somebody who had $55,000 annual income and they did not have compensating factors, so we were going to use the ratios 33-38. So 33% of their income can be used towards their housing. So that would be principal, interest, taxes, insurance, and condo fee. And we can see from this grid that 33% of $55,000 annually is $1,512. So that would cover the mortgage payment and the condo fee. Then we would say, okay, we're allowed to go up to 38% of gross annual income for total debt. And you look down here and you can see that that number is $1,741 for total debt. If you subtract that front ratio, that $1,512, you can see that if you were to qualify for the maximum amount towards your mortgage, you would only have $229 monthly remaining to care for your ongoing monthly debt. If you have student loans, credit cards, and a car loan, that minimum monthly debt that you're carrying is going to be significantly higher than that $229. And it doesn't mean that you can't qualify for a mortgage. We don't say, oh, sorry, you can't get a mortgage. It just means that the amount of home loan that you qualify for is going to be less. So the more debt you carry, the less home loan you qualify for.
Any questions there, guys? So that's really important, where, again, the more debt you have, the lower your pre-approval amount will be, because you can afford less house because there's a cap on how much debt they allow you to have. So again, this is why we stress paying down your debt is so important. And when you pay down your debt, it also helps your credit score. So it does two things for you, right? It's lowering your debt to income, but it's also going to help improve your credit score.
And then I would say, oh, go ahead.
Go ahead. The question was just like, are they, when you say income, are you doing pre or post tax? It's always pre-tax. So it's gross income before they take all of the money out, which is crazy. And maybe you can explain this, Michelle. If we live on our net, why are they calculating everything on our gross? Because half of that money we don't even see.
But it's only a third of your income, because it's assumed that you're going to be covering other expenses in your life. And that includes your taxes, that includes saving for retirement, that includes a variety of other things. And that is different for everybody. And then I would also say one key thing that I see a lot is, you know, many people have student loans. It's very common. They're all in deferment. Track down, I would have ready to provide, if you're ready to get pre-approved, documentation of what your monthly amount will be, your minimum monthly debt obligation for that student loan once it comes out of deferment. That way the lender can utilize that instead of, and we can't utilize, I think it's this amount, or I was paying X amount before. We need to specifically see documentation from the servicer.
So it's not stated, it's documented.
Correct. All right.
see.
And now we're into mortgage products. So MHP1 mortgage. So this is one of the loans you can utilize MassDreams with. It's a below market interest rate. So it is, you know, sort of bank lingo, 30 basis points below what Freddie Mac sets their rate at. And then a bank can actually decide whether or not they might discount it even more. So some banks do further discount it. So for example, Cambridge Trust does another quarter point. And so we do a discount of 55 basis points. So that's over a half point discount from your regular rate. So you will want to shop around to find out who has the best rate. You need to have at least 3% down. 1.5 can be from your own, it needs to be from your own savings. As we know, you can access MassDreams. So that's 5% down plus 1.5. That would be a 6.5% down payment. If you're using, if you're buying in Boston, you have the additional financial assistance with the city for a total of 10% in grant money plus your own 1.5%. There's no private mortgage insurance for doing less than 20% down. So there's additional savings there. It is always a 30-year fixed loan. There's an income eligibility of up to 100% area median income for total household. I have that list. It varies by community, but I can say in the city of Boston, 100% area median income for a single person household is $98,150. For 2 people in the household, it's $112,150. And it continues to go up as the household size increases. Have to have at least, you can have no more than 75,000 in liquid assets. This is what you have in your bank accounts, stocks, bonds, CDs, Roth IRA, and if you have life insurance policies with cash out option. So just sort of keeping that in mind. You may not plan to use that, but that is considered liquid. There's an interest subsidy available for households below 80% area median income. So for example, if you have a household of 3 and that household income, that is every person in that household 18 years or older, if all of the income combined is less than $100,950, you may be eligible for an interest subsidy. So this is additional money that pays towards the interest and makes that monthly payment more affordable to you. And it's available for 7 years. And one mortgage is only available through participating banks. There's more information at mhp.net. And then before we do questions on one mortgage, I'm going to skip ahead. If you could skip ahead, we'll talk about One Plus Boston. One Plus Boston is one mortgage with money from the city of Boston. So it's going to have the same guidelines, but there's an interest rate deduction. You will either get half a point or a full point. A half a point is if your household income is between 80 and 100% area median income. If you're less than 80% area median income, you'll get a full point discount. Enhanced financial assistance, the city has adjusted it so that all financial assistance from the city of Boston, regardless of what loan program you use, is going to be 5% of the purchase price. If you are not getting MassDreams, then you can utilize, they will cover the closing costs in addition. And there's a handful of lenders, and that would be Cambridge Trust, Citizens, Silicon Valley Bank, which is SVB, City of Boston Credit Union, Eastern Bank, Rockland Trust, the Cooperative Bank, and Webster Bank. So those are the lenders that do provide One Plus Boston mortgages. So I will stop here for questions about One and One Plus Boston.
Okay, I'm going to go back 1 second. Can you pay off your one mortgage early?
Yes.
Is there a prepayment penalty?
There are no prepayment penalties.
Okay, perfect. Does a Roth IRA count as retirement?
It is retirement, but it is also considered a liquid asset because you've already paid the taxes, and there are penalties to using it, but not as much as it's more readily available than your traditional IRA or 401k.
Okay. What if people in your household are retired?
If they're earning any income, it could be Social Security, it could be from a pension, any income that they have coming in would be included in the household income.
Okay, I'm gonna go back and check. Someone asked about if you can say the part about interest rates again.
Yes.
I'm gonna assume it might be the discount points.
Yeah. So one mortgage is always going to be below your regular conventional loan. And lenders are required to go down to a certain threshold, but some lenders will go further. So for example, right now, Cambridge Trust one mortgage is at 6.375. Typically rates, I don't know what the Freddie rate is as of today, but we do 55 basis points. Let's see. So the average rate is 6.925. So that would be at 7%. It would just get rounded up to 7%. So your typical conventional rate is at 7. We're at 6.325.
And that's for the one.
That's for the one mortgage. That's for one mortgage.
And then,
one plus.
Okay.
One plus would be a 0.5 point discount. So you would be looking at 5.875 if your household income is between 80 and 100% area median income. If your household income is below 80% area median income, your interest rate would be 5.375.
And I'm not sure if you're able, in terms of cost savings, what does that translate to in terms of monthly housing costs? So if I were at 7 compared to 6, is there a difference in the percentage? So for every 1% of interest rate equates to about how much of a mortgage payment?
The challenge is, I don't have that off the top of my head, but that also varies depending on your purchase price. So that's going to be very different if you have someone who's buying a property for $200,000 versus $400,000. I don't have that calculation off the top of my head, but I will say that I'm doing updated pre-approvals for folks, and you know, it's the amount, their borrowing power is going down.
Mm-hmm. Does life insurance increase your loan amount or decrease?
If you have life insurance with a cash value, it just is considered a liquid asset and doesn't really factor into the loan amount. You can choose to use that towards your purchase or not, but it just gets factored in as a liquid asset for the liquid asset test.
Okay, perfect. I'm trying to think of any other questions. So I took notes, guys. So I know some people are going to have like, what is AMI? Like, what are the numbers? So I'm going to send that out to you as well, so you can kind of draw the line and figure out where you are based on household size. Household size matters for the one mortgage. So the income qualification is different for a one-person household or a single person compared to a four-person household. Whereas for mass housing, there's just a cap. Like, this is the income limit. They give you the number, and it doesn't matter how many people are in your household. It's just, that's the total. So there's another difference between both programs. So the household size, the number of people in your household, does matter for this program.
All right, and next slide. So here we have mass housing. So I will preface this as we move on. Cambridge Trust no longer offers mass housing. So, and they have changed how the different programs they have available. So these are the basics, but you should check in with Denisha to find a mass housing lender, recommendations, and to get more information. I know that she also did a workshop presentation with another lender to really dig into mass housing. But I would say no matter what loan program you're using, making sure that you use a lender who knows it well. That is going to be key. Some lenders will say they offer everything under the sun, but if that loan originator has really never done that loan, or that lender doesn't really do it all that much, you may find it challenging. So I think that's a really key thing. When working with first-time home buyers, Cambridge Trust has a niche that we really do 1 and 1+ Boston, and we do it all the time. We work closely with the city, so we have those relationships, and that's what we know and know well. So if mass housing is the loan program that is the right one for you, make sure that you have a mass housing lender that does a lot of mass housing and really has good relationships with the city of Boston or wherever it is that you're going to, if you're getting additional financial assistance from another municipality. So that I would recommend that. And so they're also 30-year fixed rate. They do have mortgage insurance, but there's discounted options associated with that mortgage insurance is job loss assistance. They have various options, conventional FHA, purchase and rehab. They do have down payment assistance. So if you live in one of the 29 qualified communities, you can receive up to $50,000. And if it's other Massachusetts communities, it's up to $30,000. So I say details at masshousing.com, but also to definitely defer back to Denisha. And I don't know, did you want to talk about that at all? Mass housing?
I didn't mean to do that. I don't know what I just did.
Okay.
I don't know.
I won't judge given what happened to me with my computer just bouncing me off and then scrambling and having to go via phone. Anything addition to that? Okay.
No, I think once we're done, we already have the presentation from last week, which was very detailed as well. Mass Housing has a lot of different loan products within their offerings. So there's a lot of options within there. So I'll refer back to that link. I'll share that with you guys in addition to the link for tonight. So you can kind of compare and contrast, and I'll also make the chart for you guys. You'll get the chart by the end of the week. You'll get this video by tonight or tomorrow morning.
All right, so next steps. So really the key is, one of the key things to getting pre-approved is making sure that you complete your home buying class. You are going to need to have completed that in order to access the financial assistance. So I would get that completed right away. And then you would want to complete your MassDreams pre-eligibility. And you can get information on both where to find a good class. Denisha can also make wonderful recommendations, and where to do the pre-eligibility via mymasshome.org. That is a central website where you can get all the information you need: how to access MassDreams, how to find additional financial assistance, where to take your home buying class, and get lots of questions answered. So that's really the key. Then if you're looking to do one mortgage or 1+ Boston, you are going to want to contact a lender that offers that specific loan program and get started with that pre-approval process. So you are going to submit an application. So for example, the way it works with Cambridge Trust is you need to submit an online application and then provide the required documentation. So you would get all of this information from the lender, but typically it's going to be 3 years of tax returns, all the supporting W-2s and 1099s, any income that you have declared on your tax returns. We need to see the supporting documentation. We're going to need to see 30 days of pay stubs for all jobs. If you do work, like for example, I have a woman I was working with where she does a certain amount of work quarterly. So her most recent pay stub was for July. She's going to have another pay stub coming up soon. So just sort of keep that in mind. You need to provide all of the documentation, all of your statements, For your bank accounts, you're going to need 2 months worth of statements, all of your statements for retirement, documentation of any pensions. We work with a lot of folks that work for the city and for the state. So make sure you have your letters indicating how much you have in savings with your pension. Even though you may not be using this money to purchase the home, it strengthens your loan application because it shows a history of saving, and it shows that you do have a cushion and funds that you can access if you absolutely have to. And then it's the bank that will then submit your loan estimates to MHP. MHP then does a review. They will reach out to you to do your application for MassDreams and do the final determination of if you're eligible or not. Then they will also send information over to the city with your estimates, and then the city will reach out to you to do your application for One Plus Boston, including the financial assistance. And if you're not doing One or One Plus Boston, they'll do a financial assistance application. Typically, it's going to be One Plus Boston. Any questions about the steps?
I will say, just brace yourself. You may get annoyed in the process. So I try to just let everyone know, because you're going to be asked for the same documents, sometimes from the same person, sometimes from different people, because it's different departments, you're in different programs. So understand that it's all a work in progress. Everyone's working toward your common goal of you buying a home. So have some patience in there, but I prepare everyone. You're going to be asked to submit the same documents multiple times. So just brace yourself for it. It's going to happen 100% of the time. Let's see. What is the minimum credit score for the One Plus mortgage? I believe you said for you guys, it's 660, right?
Yep. For Cambridge Trust, it's 660. Other lenders may allow for as low as 640.
Okay. When buying a home, do you need to have a down payment? Is that good or bad, or would the interest rate be higher?
So for One Plus Boston and one mortgage, you are required to have at least a 3% down payment. 1.5% of that must come from your own funds. If you're utilizing financial assistance right now, you get 5% from MassDreams, and then you can get 5% from One Plus Boston. So you'd actually be looking at a down payment of 11.5%. So you will need to contribute at least 1.5% of the purchase price from your own funds.
Mm-hmm. And I think this is where we have to look at your situation and think strategically. So each program has its own benefits and its own drawbacks. So for the one mortgage, you have the lower interest rate, you have no PMI, you have access to greater down payment assistance in partnership with the city of Boston. So that helps you, but you do need to have the 1.5%, right? So you do need to have money for that down payment. With Mass Housing, you don't necessarily have to have the money for the down payment because the grant covers it. That's what people will tell you. I will say I'm a licensed agent. I don't practice as an agent, but as a licensed agent, when you're submitting offers, you have to put down an earnest money deposit with every offer, at the offer and at purchase and sales. And sellers want to see a significant amount of funds there. So it almost balances out where you have to put down about the same 1.5%, sometimes 3% down. It's just you would get that back at closing with Mass Housing. Okay. So it's not a situation where you come with literally no money, because you can't submit an offer with no money. You still need to have money for that. And you still need to have money to conduct an inspection. You still need to have money to pay for an appraisal. So there's still costs where you have to have savings. So I don't want people to leave thinking that I don't need any money. I can use this grant to buy a house. Like, you still need to have funds. And some of that can be returned to you, but you still do need to have actual funds available, okay? Someone asked Michelle, if they already have NACA, can they combine this with NACA?
So
it's a good question, actually.
It is a good question. My understanding is that you cannot combine anything with NACA. If you are using a NACA loan, you can only use NACA's resources. That's my understanding.
I believe that to be true as well. What is if in your advice, your professional opinion, what's the first thing people should focus on in completing this process?
Oh, that is a good question. Getting your credit report and making sure that your credit report is accurate and being clear about what your minimum monthly debt obligations are.
Perfect. Thank you, ma'am. And then is it $50,000 per loan or $50,000 per person? So if I'm a 2-person household, could we combine where I apply for $50,000 and my partner apply for the $50,000 and we combine that on a loan?
It's per loan, per household.
Per household. There you go. Perfect. Oh, and my mouse was full as well. So guys, I will send you details on first-time homebuyer classes. Again, My Mass Home, I'm going to send you the link there where it gives you the list of all of them. The prices range from, I think, $25 to $50. So you do have to pay. It's valid for 3 years, so it's worth it. The classes are 8 hours long. You can either have it as 4 days, 2 hours each day, or 2 days, 4 hours each day. I believe everyone's virtual at this point. Some people may have returned to in-person classes. They also have, different languages, so you can search through the platform to identify which one works best for you, and everyone offers it on different dates and times. So pick the one that works best for you and for your schedule. They also have ones where they are self-paced. So if you want to take the class at midnight because you just want to do it on your own and not be in a formal class where you have to be present on Zoom, that class is $100 or $75, and then you have to pay $25 for the counseling session. So it's more expensive. I think it's just sit with the class, get it done, so you can ask questions to a real person in real time, and it's valid for 3 years. It's worth it to me. And you need it to qualify for any of this. So look at it as $25 to get up to $50,000. Seems like a good investment overall. So how long are pre-approvals good for?
Typically 90 days. That said, I would check with your lender. Some lenders might do longer. And in this rate environment, I would say some lenders will do shorter. We still are doing hours at 90 days, but I would check back in if you find a property to make sure, because the rates are changing rapidly. We went from 6% to 6.35 in 1 week. I mean, a month ago, rates were like a point lower. So it's been changing really drastically. So you just want to check back in.
No, it's crazy. So I will send you guys links to everything tonight or by tomorrow. I'll give myself some grace by tomorrow because I do have to put my kids to bed. And once I have this recording up, I will rewatch the last one. I took notes then also. I took notes today. I will create a kind of a comparison sheet. I want to send it to Michelle, to Anastasia, and to Mass Housing to have everyone review it to see if it is as accurate as can be for you guys to use as a tool for you going out. Last week I told you guys I would send you interview questions for lenders. I will also send that as well, so that when you're interviewing or you're speaking with lenders, you know the types of questions to ask and what you're looking for and why you're trying to get these answers, right? Because there's a reason behind everything. And it's always a good idea to get a quote from more than one, because you never know. Like Michelle said, some people have different credit score requirements, debt to income requirements, interest rates. So all of those things factor in, and you just want to know so that you're comparing apples to apples, right? We want to make sure all of those things are compared evenly. So I think that's everything. Michelle Reed, are you still on here? I can't see. I know you wanted to ask a question. Let me see if I can find you. So you can ask it better. I don't think I'm asking it correctly out loud. Let me see. Oh, there we go. Ask to unmute. Uh-oh, she may have stepped away. Okay, so I think that is it for tonight. If you guys have any further questions, feel free to send me an email. I'll put my email address in the chat. You'll also get an email from me with the video recording, so you can respond to that as well. And you guys will get a lot of information coming your way. In terms of the housing market, I think people always ask, general, is it a good time to buy? And it's not a blanket answer, it's the truth. The best time to buy a house is when you can afford it. So it doesn't, if you're planning to live there long term, it doesn't really matter what's happening with the market, because you're going to be in the house and your housing cost is going to be stabilized throughout the market fluctuation. So it doesn't matter really. When it does matter is if you're planning to buy now and you are speculating, like, I want to flip this, so it's an investment, I want to sell it in 2 or 3 years. We don't know what's going to happen to the market by then. So you could be upside down or you could profit greatly. We don't know. So it's always making sure when you're thinking of buying, what's your end goal is what should determine if it's a good time for you to buy, right? Because the numbers have to work. If it's cheaper to own than it is to rent, or even if it's the same cost to own as it is to rent, it may be a good thing for you to buy, because now you know as rent goes up, your housing cost is going to be stabilized for the most part, right? If you see that you're paying an extra $500 or an extra $1,000 to own, and it's literally you have to go get another job just to pay for all of that, I don't know if it's a good time to buy for you, right? So you have to understand your situation and make it work for you. As long as you can afford it, we know that real estate, it has value in it. And I don't know if you have anything extra to say there, Michelle, because everyone's like, I'm waiting for the market to crash. I'm waiting for this. I'm like, I remember when 3 families were 500,000 in 2010, and people said it was too expensive and they were waiting for the market to crash. And we're at 1.2 right now. All those people who are waiting, they are not buying. They have waited themselves out of the market. So whenever you can afford to buy is the time to buy, is what I say.
And I would just add to that, we won't have enough housing stock for, I would say, the remainder of my lifetime. There will not be enough housing built in the region. So the market may slow, but the impact is not, it's not the same as it was in 2008. It's a totally and completely different set of circumstances. And in fact, the rates right now are by design by the federal government to stem inflation. And so the rates will come down. We don't know exactly when. We know they're going to go up a bit more, but ultimately buying a home and having an asset is about the long term. So I bought 2 homes at the height of the market. I was underwater for a number of years, but my asset then grew and then gave me opportunity. So it's opportunity over time. So it's really about what your needs are, and if you are okay to be in a home over time, letting that asset work for you.
Let it work. It's all letting it work for you. If you're trying to flip it, or it's literally you want to see if you can. I've had people in the session last week, what if we got the 50,000 now, and since it's a grant, we sold the house next year? Could we take that 50? You could, if it's available. Like, we literally, no one knows. And if anyone tells you, they're fibbing. No one knows what's going to happen with the market, definitively. So we don't know if it's going to be up or down. We really don't know. I know, a lot of people have seen appreciation. So their home has gone up in value in the past couple of years. And there are a couple of people where their home has lost a little bit because they did that whole appraisal gap and paid too much for the house. And now it's like the market's slowing down. That gap has shrunk for them in terms of profit. So it's making sure that it works for you long term. It's an investment into your future. I look at it simply, it's stabilizing your housing costs. If nothing else, I would like to know that every month and for years to come, I am paying $2,000 or $2,500 for a 3-bedroom compared to it's $2,500 this year, and then next year it went up to 28, and then the next year it's 3,000. I don't have control over that. And that means I have to move further and further away from where I want. So providing that housing stability allows you to save because it's a set fee. You can go back to school and earn more money. You can do a lot of things where you can, again, advance your future, but you don't have to worry or stress about housing cost. So that's why it's important for me to help as many people just kind of understand and navigate that process, so you don't make the wrong decision. I've told some people they shouldn't buy because they're paying so little in rent right now. I'm like, keep saving, invest, do other things right now until the right deal comes for you to buy a house. Like, don't rush to buy a house because you're paying $900 a month for rent. Why are you gonna go pay $2,000 to own that? Right now you're upside down. Like, no. So they're fixing, their finances and getting things in position. So again, it's all about strategy, and we just want to make sure that you guys are thinking kind of long term for everything. Oh, and they asked about the towns. Let me see if I can pull that up. Sorry, guys. So let's see, Michelle, if you have anything else to add, you can add, and I'll look for the link with all of the towns for MassDreams.
And it's all of the gateway cities and Boston, Framingham, and Randolph.
But if they don't know what the gateway cities are,
I
that's a
know.
problem sometimes.
Lawrence, Lowell, Salem, Peabody.
I'm like, because I don't know all of them either.
Attleboro. I'm not sure if Taunton is. New Bedford.
I think it is.
Worcester, Springfield.
Do you know where, if I share the screen, can you tell me where it is on the website? Because I don't know it off the top of my head. Hold on. I'm trying to find.
Scroll up. Other way. Up. I would. I confess I have not used. Find out if you product features. Oh, there.
Oh, there it is. There we go. Boom. Eligible communities. So I'll read it off for you, but you can read it yourself. Attleboro, Barnstable, Boston, Brockton, Chelsea, Chicopee, Everett, Fall River, Fitchburg, Framingham, Haverhill, Holyoke, Lawrence, Leominster, Lowell, Lynn, Malden, Methuen, New Bedford, Peabody, Pittsfield, Quincy, Randolph, Revere, Salem, Springfield, Taunton, Westfield, and Worcester. So you guys can take a screenshot of that for now, but I'll also send it out for you guys in email. You have to live in one of these towns to be eligible, but you can buy anywhere in Massachusetts. So to qualify or to be eligible for the grant, you need to live in one of these cities or towns, one of these communities, but you can purchase anywhere. So let's say you qualified because you live in Taunton and an affordable unit came available in Newton or in Wellesley. You can buy in Wellesley or Newton and use these funds towards that, because you can buy anywhere. You just have to live in one of these 29 communities. Okay? And I don't want anyone to be defeated or feel defeated because you see that you have too much debt or your credit score is not where it needs to be or you have negative savings. Do not be negative and do not beat yourself up. Today is the new day where you learned about all the mistakes of the past, and we leave the mistakes in the past. And from today, you're going to make the right decisions. We're going to put a plan together and you're going to move forward with the plan, right? Well, that means is you may not buy this year, but if you keep working the plan, you will be able to buy by next year or the year after, as long as you stick to the plan. So don't beat yourself up. Let's just get it together, snap out of it, and we get to work. Christmas is optional. I'll say it to everyone. That's like my slogan until December 31st. Christmas is optional this year. We have work to do, people. There's $50,000 on the line. Okay? So thank you all for joining us tonight. You could have been anywhere else, but you chose to stay on until almost 8 o'clock at night learning to help you, to help your family. So thank you guys. Thank you, Michelle, for joining us
Thank
tonight.
you.
We truly appreciate it. And for working through the technical glitches. We got through it, right?
All right. Thank you and good night, everyone.
Thank you, everyone. Good night.